What's really happening with Bitcoin Depot after their latest earnings report? While most investors are focused on the Q4 guidance, they're completely missing the bigger story unfolding behind the scenes. I'm breaking down the 10 most critical takeaways from Bitcoin Depot's third quarter earnings call, and number 1 might surprise you. Let's dive in, counting down from 10 to 1. Coming in at number 10, Bitcoin Depot just launched operations in Hong Kong. This marks a significant step in their international diversification strategy, opening up exposure to Asian markets. While Hong Kong may not reach thousands of kiosks, given its size, the company sees meaningful revenue potential and possible acquisition targets already operating in market. At number 9, Australia continues to emerge as a global hotspot. Bitcoin Depot has deployed over 260 kiosks there this year, and Australia now ranks third worldwide in total Bitcoin ATMs. The company is encouraged by retail partnerships and expansion opportunities they've identified, though it's still early days for this market. Number 8 brings us to enhanced compliance standards. Bitcoin Depot announced they're requiring customer identification before any transaction, regardless of amount. This goes well beyond current federal requirements and includes additional protections for seniors. While this has modestly impacted near-term activity, it positions them as the most compliant operator in the industry. At number 7, the National Bitcoin ATM acquisition significantly expands their footprint. Completed in early October, this deal added over 500 kiosks across 27 states to their network. The acquisition solidifies Bitcoin Depot's position as North America's largest Bitcoin ATM operator and brings productivity roughly in line with their existing fleet. Number 6 highlights their fortress balance sheet. With over $70 million in cash and digital assets, Bitcoin Depot raised an additional $15 million in a registered direct offering. This war chest positions them to pursue strategic acquisitions while competitors struggle with regulatory compliance costs. Coming in at number 5, the Q4 guidance deserves context. Revenue is expected between $112 and $115 million, with adjusted EBITDA in the low single-digit millions. This represents one of their lowest revenue quarters in years, but understanding why is crucial for long-term investors. Number 4 explains the regulatory headwind. Over 15 states enacted restrictions this year on transaction sizes or fee caps, with 6 taking effect in Q3 and early Q4. The company expects the steepest impact initially, followed by recovery as the playing field levels and non-compliant competitors exit. California's experience shows enforcement eventually drives out bad actors, improving conditions for compliant operators. At number 3, the profitability story is impressive. Adjusted EBITDA surged 75% to $16.1 million in Q3. Gross margins expanded by 250 basis points to 17.4%. Operating cash flow for the first 9 months jumped over 90% year-over-year to $33 million, demonstrating the operating leverage in their business model. Number 2 reveals explosive transaction growth. The median transaction size jumped 40% year-over-year to $350. Total transaction volume reached $162.5 million, up 20% from last year. This shows strong underlying consumer demand despite regulatory challenges, with customers transacting in larger amounts. And the number 1 takeaway is their aggressive fleet expansion strategy. Bitcoin Depot ended Q3 with approximately 9,300 active machines and plans to reach 10,500 kiosks. Here's what's powerful. 3,800 of their current kiosks have been installed for less than 1 year and are still ramping up. These machines typically achieve payback periods under 8 months regardless of Bitcoin price. As these newer kiosks mature, they'll drive substantial incremental cash flow. The bottom line: while near-term regulatory headwinds are creating volatility, Bitcoin Depot is playing the long game. They're weeding out less compliant competitors, expanding internationally, and building an increasingly profitable fleet. For investors willing to look past 1 quarter, the setup is compelling. What do you think about their strategy? Drop your thoughts in the comments below, and don't forget to subscribe for more earnings breakdowns.